Welcome back. This is Buy Now Sell Now, and it is time to hit the query segment, and quite a few of you have already written in with your queries. Just a quick reminder, in case you are new to this leg of the program, if you've got a query, do ask. We encourage everybody to ask, but we can only take a few queries of the many that have come in because we have limited time. And second, when you're posting your query, do post just one stock and mention your name and time frame as well. We've got the first one for you, Kunal. This is from Rajan from Bengaluru. He's asking about ICICI Lombard. He's looking for a short-term view. Should he get into it?
So I think at current levels, 1430, 1435, support-wise also, I think it's attractive because short-term support for ICICI Lombard is closer to 1420 levels. So the risk reward is also quite okay. But the only concern is that it's not a momentum kind of a stock. So risk reward is one aspect to look at, and momentum is the other major aspect to look at, because if you buy the stock from a short term, you don't want the stock to be stagnating at a price, but you want the stock to come back into the thick of momentum very, very swiftly and quickly. So I think in that sense, it may probably be a bit more prudent to try and wait for the stock to break past about some levels where momentum can come back again. So I would suggest that you can buy, but a buying trigger on the upside could be kept at 1450 mark. If the stock crosses that hurdle, then I believe it could probably warrant a good buy at those points where you can keep a stop loss 1420 and near-term target potential of at least 1480 to 1500.
One is coming from Soumitra. He wants a view on AMI Organics for the longer term. Rajesh, do you track this counter AMI Organics? How does it look for the long term?
Yeah, this is a very good company in organic chemicals. I think the China Plus play on chemicals, I think this company is going to do well. Although it has run up quite a lot in the recent past, but I think for a longer term horizon, one can stick to it.
The next one's on BSE, and this is coming back to you, Rajesh. Bought at levels of 1,530. He's looking for a view. This is Shubham. He's looking for a view till March and also a long-term view. What's the perspective here?
See, we are extremely bullish on this counter from 900 odd levels, and we have recommended to our clients. We have even initiated a report on that. And I would just say that don't keep a time horizon of till March, keep a longer term time horizon, and I won't be surprised if the stock can give very good returns. Basic reason being the market cap is less than 7,000 odd crores. It holds CDSL, which itself has a value of 3,000 odd crores. Its investments in SME platform, in INX, that's the International Stock Exchange, the Star Mutual Fund. All these investments again have a value. This company is cash rich with a lot of money invested in mutual fund and other things. Debt free. They have been doling out dividends from so many years, and the dividend policy is quite high. And not to forget, once the NSE IPO is announced, the entire exchange sector is going to see a re-rating, and then this company might see very high levels. So I think every dip should be taken as an opportunity to accumulate this stock.
Shailaja wants to know whether she can buy AB Capital at the current level for the shorter term. Kunal, can she go ahead with this?
AB Capital has been a stock which has somehow gone into a very strong kind of a time correction for itself. So the prices have remained in the range. 100, I think, is a support, or just slightly below 100 is where the major support is for AB Capital. And on the upside, I think 125, 135 are the two important resistance points for AB Capital. So I think if you are looking at it from a price wise as well as a risk reward play, then I think 100 could be a good level where you can look to buy AB Capital. But the only concern is that how far and how much can the stock consolidate. So if you're looking at it from a short term perspective, I believe the rewards may be a bit more limited. But if you have a time horizon which could be extended to say at least 1 year or plus, then I believe that the real potential could be unleashed for AB Capital on the upside. So you have to tweak your time frame, as well as a buying rate of 100 could be a much better rate to enter the stock.
The next question is coming from Kunal, and this one's for you, Rajesh, on Tata Power. He's looking at playing the renewable theme, I think, if I'm not mistaken, or he's talking about electric mobility. He's looking at both Tata Motors and Tata Power, but I'd ask you to speak about Tata Power. Should he get in at this level?
course, one can buy if one has a time horizon of maybe 12 to 18 months with a price target of 20-25% from the current market price. It has run up quite a lot in the last 1 year or so, so it might see some amount of consolidation. But with the renewable theme and the EV theme, this company is going to do well. The management is good, the numbers have been good. We have a buy call on this.
This next query is actually coming in from KR Balan, though no doubt he's asking it for rapid fire, but nevertheless I'll ask this one to you, Kunal, right now. And Mr. Balan wants to know that he has 300 shares of Agarwal Industries, which he's purchased at 360 rupees per share levels. He wants to know whether he should hold, sell or shift to large cap banks like ICICI Bank and Axis Bank.
I think if I'm not wrong, I think I'd given a view on Agarwal Industries almost a couple of weeks back on the same show, expecting that the stock would break out of its resistances. So, what I'd observed at that point of time was, that there's a bullish flat pattern getting formed for Agarwal Industries. The stock was at 355 or 358 kind of levels, and from there it's moved up pretty well. Now the stock is perched at a multi-year high. I think if I'm not wrong, it's at 2000 after 2018, the first time where the stock has come back towards levels of 400 plus. So in a market which is so volatile, if a stock shows such kind of price performances, which means that you have to stand up and look at the price and try and chip into these names. If you've already bought the stock at lower levels, I would suggest to hold on and keep a higher target of at least 475 to 480 over the next 3 to 6 months.
Okay, Rajesh, I'm going to just check if you have a view on this. Future consumers, we've got Venkatramanan, who's been asking this for a while now. He's looking at a long-term view, and I think he's over the past few days listed names like SBI and Canara Bank as well as options. Would you suggest that the latter would be better to consider as opposed to future consumer?
Of course, because there are a lot of controversies, a lot of stories going on. The brands are not doing well. I don't know what will be the future of this deal and all going forward. It's better to stay away from these kind of stocks. And as far as SBI and Can Bank are concerned, I think they're on a very strong footing. Especially Can Bank, I would say, if somebody is having a short-term view of 1 or 2 quarters, Can Bank can be bought with a target of 225, 230 in the very short period.
This next query that we've got is coming in from Niranjana. Niranjana Arvind wants to know about Valiant Organics, if it's a good company to hold for the next 2 to 3 years. Niranjana already has 50 shares purchased at 1550 rupees per share. Can I hold on or should I exit, given the stock is decreasing day by day? What's your take, Rajesh? Valiant Organics, do you think it makes sense to hold on to this counter for the next 2 to 3 years? No doubt in the short term the stock has been declining.
See, though the company has done good and the numbers have been good, but still I think the valuations are on a high side. It may see some amount of correction in the near future. So it's better to exit the stock and switch to some other good names, maybe pharma stocks, which we have discussed in our show in the earlier part.
Okay, sticking with banks, Rajesh, coming back to you, apart from SBI, which I think you already took into consideration for the last question that I asked, we got Velapan who's asking about ICICI Bank, Axis and IDBI Bank as well. Which of these would you pick for the long term at current market price?
Yeah, at current market price, I think ICICI Bank is on a very strong footing. Other than that, I would like to add Kotak to this. Kotak is going to do well with RBI allowing increased promoter stake. The numbers have been good. All their subsidiaries, that's Kotak Securities, mutual fund and other things are doing well. I think this stock can do well in the near future. So one can even add Kotak Bank, or from the selected list, I would say ICICI Bank is on a better footing.
Okay, this one is for you, Kunal, and it may be a bit of a longish question, and this one is coming from Sagar. He wants a view on Nifty and Nifty Bank. He's holding 100 lots each of 16,800, 16,900, 17,000 call options at lower levels. This is for Nifty. He wants to know whether he should book profits or this is a pullback because of the oversold market. A Nifty Bank comments I will ask you some other time, but particularly on Nifty, 100 lots each of 16,800, 16,900, 17,000 call options at lower levels. What should Sagar do?
Maybe half an hour back, then I would probably have said that I think it's good time to book our profits because the markets was perched quite well at 17,300 plus kind of a mark on the spot as well as on the FNO levels for the index. But the markets have, of course, in the last half an hour or so have come back into a corrective kind of a phase. So I would sense that if you've bought good quantity of call options, look at this market as more of a market which is giving you those occasional rallies in between. Now we can only hope and expect that those rallies can get converted into a trend. But if you're playing with options on the buy side at a time when the premium or the IVs can collapse significantly, like what we saw till yesterday, the IVs were at 2021 kind of levels. Today, when the markets were at 17,300 mark, the IVs had fallen down to almost 18.5 or 18 odd levels. So that itself indicates that you have to be very, very quick in terms of booking your profits on the buy side when you buy an options when the IVs are falling against you. So I think in that sense, I would suggest that if you get maybe another rally in the next in the second half of the day today, I think it could be prudent enough to book out major of your profits from your call options which you're holding.
Okay. Kunal, I'm coming back to you. This is a question from Mr. CP Raj Kumar. He's looking for a time frame of about a year and he's got no specific stocks in mind. He's hoping that you can suggest a few that he can trade in with the perspective of a year.
See, I think from a year perspective, we go back to the traditional themes on markets. Now, I would assume that if the markets continue to be volatile, say over the next 2 to 3 months, you might see many of these large cap and mid cap names getting into correction. So you first need to have a phase where you can need to maybe buy 50% of your expected quantity at current levels, and then hope that the markets get into maybe one more round of correction, and you can try and chip into these names a bit more lower, or you can add a bit more higher quantity at lower levels. So I think few names which I would probably recommend. One of them, of course, is Reliance Industries because of the way the stock has outperformed and being one of the strongest performer. And it's already gone through a 10 to 12% correction in the last 1 month. So that makes the price levels very attractive. From the IT pack, I think either TCS or Infosys at current levels could actually turn out to be good plays because of the kind of resilience these stocks have shown and the kind of price performance historically these stocks have provided. I think from the other spaces, banking stocks like ICICI Bank and SBI, I think they are phenomenal buys at current levels. These stocks have already gone through an 18 to 15 to 20% kind of a correction for themselves in the last 1.5 odd months. So I think you can look at chipping into these large cap names because whenever the recovery happens and shapes up for the index, it would first predominantly be large cap names which would lead the rally, and then added by when the market gets into a confident zone, when the sentiment improves, then you would see mid caps outperforming. So you should first try and position yourselves into large cap names and some of the names which I mentioned accordingly.
All right, just to do a market check right now, if you look at what the benchmark indices are doing, definitely way off the day's highest point right now. If you see the Nifty is just higher by about 50 points. At one point in time, Nifty was higher by about 200 points. And this is also reflective of what is happening with US futures. You have Dow futures that is down over at least 390 points at this point in time. You have S&P 500 futures that's down about 0.8% and Nasdaq futures are down about 0.5% currently. And this also, remember, you have comments that are flashing on the bottom of your screen coming in from Moderna CEO saying that the vaccines are likely less effective against Omicron, and this is as per reports. It's an interview that is given to a media agency, as well as they are saying that the Moderna CEO is warning a material drop in vaccine effectiveness. On back of that, you can see what is actually happening on the benchmark indices at this point in time. Nifty is actually down, actually trading positive with only just gains of about 50 points currently. Let me move on then with the queries. This one is coming in from Ujwal Kumar, and Ujwal wants a technical view on RCF. He's holding about 210 shares that he's purchased at 70 rupees per share. He wants to know whether he should exit or continue to hold on to it. What's your take, Kunal?
I think if you bought at 70 rupees, which is almost exactly at the current price of the of the stock RCF, so I would suggest that you can maybe look to hold on to the stock. But as I said, it may not be a stock which could probably be a high momentum kind of a zone. The risk reward is attractive, but from a short term wise, I would still have some reservations in terms of expecting that the stock would jump up pretty swiftly for the near term. But I think in terms of stop loss, you can keep 67 as a stop loss for your trade on RCF, and look out for near-term opportunities of rally closer to 76, 78 is where you can look to book out profits if the stock happens to come to those levels over the very near term.
It's, this segment, Cheryl, it's so lovely, and gentlemen, you will also agree with me. One of our viewers from Kerala points out that he got interested in the markets in the 80s because his dad was buying at that time. Most of the stocks that he bought were at face value, and he's 59 now and he's still a market enthusiast. Joe is asking about Deepak Nitrite, and this one's for you, Rajesh. He's asking whether this is a good time to accumulate.
See, it's a very strong company in phenolics. The anti-dumping duty imposed in some of the products are positive for the company. The capex has been done, and that's going to add to the numbers. And not to forget the China Plus factor. Yes, somebody might say that it has run up from 180, 200 odd levels to 2,500 odd levels, but still it's a good buy for a longer term horizon, and one can go ahead.
All right, and with that, we actually kickstart the rapid fire. And the first one is coming to you, Kunal. It is on Dilip Buildcon. Arvind has bought shares at 610 rupees per share. He wants to know whether he should average now and hold for the medium term, or what else should be his strategy.
To average at current levels, 500 seems to be a good support. So purely risk reward wise, seems to be a good level where you can look to average it out further.
Kunal, HCL Tech for 6 months to a year, what is the potential upside that you see? Would you get into a trade now?
Well, I think it's been an underperformer, frankly, in the last 2-3 months. So I would probably, expect Infosys and TCS to outperform. But specifically for HCL Tech, I would expect a rally towards, say, 1200 to 1225. That could be a toppish resistance for the stock.
Right, this one is coming from Rajesh, and this one is for you, Rajesh. He wants a view on IRCTC for the next 3 months. Will it cross 1,000 rupees a mark?
See, 3,000 rupees can't be said because of this corona and all. I would never know. But for a longer term horizon, yes, it's a good level to buy.
Rajesh, HCL Tech, I just asked on the technicals, is it a good hold? Bought at levels of 1,141 by Jitin. Should he hold for the long term?
Yes, one can hold to the stock, but I would go with Kunal's view that Infosys and TCS are on a better stand. Even Tech Mahindra is looking better.
Tarun has bought a CESC with the short-term view. What should he do, Kunal? Stay put with this holding? How does it look?
I'm not sure of the exact buy price, but then if it's from a very short-term kind of a view, and assuming he's bought even closer to current levels, then I would suggest to hold on, keep 84 as a stop loss on the trade.
We've got Deepak, who's a long-term investor. He holds ITC and Coal India. He's asking Rajesh, is this a good time to average?
ITC, of course, one can add because of strong fundamentals. Coal India, they have yesterday announced 9 rupees dividend. If somebody is interested in that, one can go ahead. Otherwise, ex-dividend one can add.
Alright, gentlemen, that brings us to the end of this edition of the Query segment. It's been an action-packed one as usual. Thank you so much for taking the time and being so accommodative. And on that note, viewers, we're going to have to slip into a short break. For all those of you who've posted and who've not got your queries answered, well, I hope that you benefited from the queries that we did take on this program, and we'll be back tomorrow to take your queries live. Do stay tuned, lots more coming up after this break.